right, so welcome again, everybody. So we are looking through the weekly updates. So we are meeting after 2 weeks. So let's talk through what happened. I think last time when we met, there was a lot more concerns around what was happening in the software world. We had just gone through pretty significant drawdowns in the software. Since then, I would say like many of them have stabilized. I won't say they have recovered because they're still kind of in the drawdown phase. But I think we are seeing much more stable markets in last 2 weeks in tech. While we also had one of the big earnings in NVDA. So as we were playing the graphics before we started recording earlier at the start of the call. So we will be sharing that as well on our socials and on YouTube, etc. So as usual, I think what we do is we look at the charts that always is easier to talk through. So let's get going on that and look through what is where the markets are. So I think it's not a surprise. We have talked about it like it's interesting that every time this year we have been talking like it's almost like a sideways market. Means we have been discussing this, whether it was Investor Day, whether we have done in these weekly calls. It's still the same case. I would say the range is actually narrowing. If you see, this is what we call as a triangle pattern in the recent last, I would say 2 months or so, or like 1.5 months or so. While I think since the December almost, we are going sideways right now on SPX. So what's the theme here? The theme is rotation. Means they've used it doesn't feel like sideways if you're invested in individual stocks. If you're invested in, as we discussed, there is a big crashes happening in tech side. We have seen gold and silver going up and down. We have seen individual stocks performing 10, 20, 30% up or down. So that's what we call like where market is becoming uncertain. It's becoming like more like a rotation is the theme right now. We did talk through more like a K-shaped market where some will go up and some will go down. So let's look through that. So I think we have always been looking at NASDAQ as a proxy for the tech stocks. So as I said, after the early February kind of a crash, you can call it, because it was pretty steep around early February, I would say, in the first week of February. And then I think we saw this, like the end of that week, we already saw some recovery and we have been sitting above 200 moving average. So still not as I would call it as a weak-shaped recovery, still like in a kind of a drawdown phase. But I think we have seen at least some stability around it. We are seeing some individual stocks recovering. So that is, I think, the story right now, that the people are still questioning every day. There is a new theory around. I think everybody has looked at the Citrini sensational piece about how software can AI can take away jobs and so on. And yesterday, I think what the block did in terms of cutting jobs did not help it either today, like in terms of the storyline of how software is at risk and jobs are at risk. So I think overall, it is an uncertain market. It is a kind of a conflicted market, as I say, because on one hand, AI is supposed to be a big game changer and jobs will go away. On the second hand, market is still questioning those who are spending on AI. Like, why should you, if AI is such a big deal, then you should be celebrating somebody like Meta or somebody like, all these individual hyperscalers spending money, but they are punishing both because there's uncertainty around how it will play out. So that is the story, I think. And when uncertainty happens, what happens is always there is a rotation into like gold and silver. So gold, after this whole volatile correction, we have seen the uptrend is continuing. Silver was the best gainer of this week, I would call it, and it did very well again. It usually follows gold in terms of correlation, and it's again picking pace. And the other safe haven is the U.S. Treasury. If you see the yields are dropping, that means a lot more money is flowing into bonds. The auctions have again started showing a lot more demand. So we are seeing basically a pull towards safety right now in this current environment. So that is, I think, the theme right now in terms of where markets are. So having said that, we have not seen pull downs, as we said, like means we have not seen any major corrections beyond, as we say, there's a rotation here, SPX is not dropping. So that's actually a good sign. That means we are consolidating. We are seeing, individual corrections, which can reverse if the market takes the, upside path. So we will be watching, because now, as you can see, like technically, we always look at a triangles to resolve one way or other. Either it has to break out or it breaks down. So I would say as we are getting narrower and narrower in the range, since I would say late January, almost the February month, we are continuously shrinking this range, and this triangle has to resolve. So that's something which we are all looking forward to. Now, what other things we are watching is VIX, which is the volatility. And the measure of volatility, as you can see, it has been on the upside. It is tracking, like it's not able to drop below a certain level, which is a little bit of concern. And this is what it used to be, if you remember, like every earning cycle, it happens. Usually after earning cycle, it goes down. This is what we saw in the last quarter. This quarter, we are seeing there are other factors, as we said, right? And there's a lot more concern around general software. There are a lot more concerns around. And then I think we have some other geopolitical reasons. For example, every weekend there is this rumor around whether US will attack Iran. There's always this, unrest right now in the markets around that. So, and that is also showing up in something like, if you look at the oil prices, like oil prices have been shooting up. The energy sector is doing well because the oil is doing well. And I think that's one more factor, which is kind of taking away some of the capital. Like I think if you're looking into the sectors, we did share, like if you something like a energy sector is one of the best performer this year. Means again, I don't know how long this will last because oil by default is going through the peak demand stage where there is at certain price the rig count start increasing and everybody OPEC and everybody starts increasing their supply. So I don't count on this to sustain. But I think in short term, this uncertainty is leading into commodities being preferred over tech because market is getting a little sour on what is the impact of AI on the tech sector. So that's the story of the markets. I would say the leaders are waiting in a wait and watch mode. The big news this week was, of course, NVIDIA. Earnings were great, as we were showing in the graphics at the start of the call. And that's something which I think we have been talking about if you are in our WhatsApp, in our macro discussions, we are talking about the speculatory overlays which create the immediate move. So it doesn't matter how good the earnings were. I would say, let's look at this. This is the chart which I saw from one of the Twitter contributor. So this was the chart of, and these are kind of data we also get like in our own ways. Like so I can't use some of those feeds which we subscribe to, but basically we did talk through some of these things. So let me help everybody understand because there are a lot of discussions around why market is dropping. So I just want to take a couple of minutes to explain that. So just to help you understand this chart, this was one of the snapshot or basically next day after earnings. So this is similar chart before, but earnings. But typically what this means is these are the puts and calls. White is the calls and puts are the blue bars. As you can see, there was a huge amount of open interest at $200 and above $200. So when market makers are selling, so these are the retailers or maybe speculators saying that NVIDIA will go above 200. And if you can see how much of open interest was there. Now, if you are a market maker, the simplest thing you can do, because the stock itself was at 190 or so before earnings, you can sell this for $5 and you can buy the stock. So basically, if it actually goes above $200, not only you make $5 on the premium, you also make $8. So you have up to $13 to make. And even if it is above $200, you can make $5 here. And so this is basically a pretty easy market making tool. Of course, they have to hedge it for downside. So for all we know, the same market makers might be buying these puts. So maybe nobody was buying the put. Speculators were not even buying the puts. And most of these puts were probably market makers just hedging in case it goes down because they are holding the stock. But what happens when stock tries to go above this and it doesn't go above that after earning? It immediately, the market makers start, the people who had bought this call option for $5, this price of call option become $2 or $1, it starts going down. So most of them will either exit disappointed that it did not work out. So as these calls are getting closed, the market makers who are holding the stock to cover for this sold call, they have to start selling the stock. So that's why stock is going down and more calls are getting underwater. And then look at the overlay of another set of people who are long in margin and so on, and they start throwing the towel and everything starts collapsing. So this is what happens when speculatory layer and the options layer become so big that it doesn't matter fundamentally whether the earnings were great. It's all about we were sitting at a certain level and the market there was not enough demand after the earning to take it higher up so that those call can realize the profit and they start losing money. And then the market makers who were holding the opposite position, they start selling the stock. So this is very typical behavior if you are able to see the data. But as a retailer, probably you cannot see the data. You are able to you are just wondering what happened. So this is why we always say, don't count on news playing out exactly the way it should. Having said that, we do see that there's a great support for NVIDIA at 200-day moving average and so on. Probably it's a great entry. Again, we don't know how much of unrolling is possible. But this week, now the expiry is over, the Friday is gone. This was the only expiry which was after, even though we have 3 weekly expiries now, but this today's expiry was the only expiry which is after the earning, because the previous expiry was at the close of Wednesday, which was before the earning was announced. So I think this is where this can be an impact of not necessarily a reaction of market being disappointed with earnings. It is more about how much call volume was opened against this position. So these are the kind of things I wanted to make sure that we discussed a little bit. I know that a lot of people were not clear about what I was trying to say there in written. I just wanted to show this so that people understand how this speculatory layer on probably totally hides the fundamental. Like fundamentals are that the earnings are great. Nvidia is pretty cheap right now because if you look at their earning growth, they have been beating market estimates left, right, and center. And again, when you look at the next week data, we may have totally different situation because data changes every day. The speculation right now, you may see a lot more puts being opened. You may see a lot more calls being opened here. And there's this whole market makers, what they're doing. You will see the data every day when you at the market open. We try to analyze that when we are managing our own short-term positions, but this is not something which is science. This is more about uh, it's a game theory, as we call it. Like everybody's trying to outplay each other. And right now, people who were speculating, they lost it because stock did not go above 200, where the maximum bet was, and that led to a major drop because there was all these positions have to be kind of rolled back by end of this week. So that is a story of, I would say, Nvidia and and typically every tech stocks which we are seeing like 10% moves after earning, whether it was Meta, whether it was Amazon or any stock which is crashing. The problem is the speculatory layer is becoming so big that the immediate reaction or the next few weeks reaction is totally independent of the fundamentals sometimes. And that is, I think, can confuse you when you're saying why market is punishing a certain stock for no reason. Yeah, so I think these are the few things I wanted to talk about. Let us keep it for open for the questions here. So I just wanted to make sure that we have these perspectives at a big picture level. I think again, as I said, summary is we are seeing some uncertainty. We have seen a lot of turbulence in tech. I have not seen any data to back up any of those fears in tech. Like even when you say like something like Salesforce, when they came out, they're still predicting pretty decent growth. There was a pretty big podcast which the CEO was on, and he explained how like one a great example he gave was even Anthropic and OpenAI are some of the biggest customers of Salesforce. So people who are his logic is if the companies who are supposedly building LLMs, they are taking my services and they are growing the revenue for me as a customer, how can somebody using their tools be replacing me? Because again, these are all short-term logics, but what I'm trying to highlight here is that there are always going to be arguments and counter arguments. Nobody knows. So let's first of all align this that anybody who is claiming that they can see the future of how this technology will play out. It's a fairly new technology. These are all hypotheses of how software will impact. One thing's for sure that AI is transformational in terms of it is growing every day. It is creating big changes in how we work. The token usage and the demand for AI deployment and the data centers is growing. So that is a fact that is based in data. That is not hypothesis. And that is where I think the market is sure, and that's why we have NVIDIA sitting at $5 trillion almost, and that's why we have all these Avago and AMD and all the basic chip suppliers who are who are providing these GPUs and custom TPUs and so on. They have already gained because that is a certainty, because they are already seeing the revenues, they're already seeing the contracts. The question mark will always remain on everything who have not monetized it. Like for example, we have seen Microsoft correcting so much. We have seen Google going down earlier in early days of AI and then catching up and becoming one of the top market cap companies because they are now assumed that they have already been winning the race since they got the whole Gemini 3 onwards. The adoption of Gemini is increasing. But these are very fickle, as we can see. Like, if you say 12 months ago, OpenAI was the leader, nobody was able to touch them. Now we have Anthropic uh, rolling out these use cases every day. We have Gemini, as I just discussed, catching up to OpenAI in performance. It's a matter of just every 3 to 6 months, there's a new model launched. There are these models are getting launched every 3 months and 6 months, and the story keeps changing. So we need to understand that we are in early days of this AI race. We are in a pretty much a very competitive phase. Um, Maybe until last year, one company like OpenAI was seen as a winner. Now there are three or four horses in the race. So things will change. Things will people will interpret how that impacts each of the companies. As we have seen with, as I said, with Microsoft, like as soon as OpenAI lost their lead, Microsoft was seen as the clear winner with OpenAI, and they have lost that traction, and they are languishing at 40, 30, 40% down from their top. So this will happen. I mean, this can happen to any stock. And so we have to watch out and we have to position accordingly. So that is, I would say, the state of the market. But in general, again, going back to the fundamentals, we are seeing a lot of investments coming. Even the foreign money is continuing to flow into US. We are seeing it with bonds. We are seeing it with the equity. So fundamentally, macro, like always talk about in terms of the amount of money being printed, the amount of M2 money supply and everything. That is still growing. So there is nothing telling us macro. There is no headwind at all. Means we are expecting another 2 rate cuts. We are already significantly lower rates than last 2 years. Means both of the last years we have seen 3 to 4 rate cuts. So macro is pretty much supporting growth. And we are expecting more rate cuts later this year. So it's and now again yields are dropping. When you are 10-year yield going down, that means cost of capital is coming down. So there are a lot of positives for the market. The other positive, as we discussed on the chart, is that SPX is not dropping, like the wider indices are not dropping, and money is rotating. Whenever there is a sell-off in one stock, there is always something else which is going up. And we are seeing mostly sideways consolidation. That also tells you that money is not exiting the market, it is just rotating right now. And once this panic is over, once the people start seeing the clarity on each of the stocks and individual companies of what their individual stories are, they will find their pricing. And that's where market can reverse. And that's where I would say we're just waiting for tech. At this moment, data doesn't suggest anything wrong with any of the tech companies. It's all about they have to now start answering. The whole optimism which was priced into tech is kind of getting released. So it's mostly healthy, I would say. The valuations are becoming cheaper. And if they can justify individually their growth to continue, whether using AI or whether organically, because forget about AI, right? Means there is an underlying business, which is each of the companies, they are almost monopolies. Some of these companies which has corrected by 40, 50, 60%, they are owning a big sector, a big use case. And when the GDP is growing at 3%, when the overall tech sector is growing, when the spending is so high, there is always money being spent, and there is always the market to capture. So I think markets sometimes focus too much on one side, which is the AI part. But whether they use AI or not, I think ultimately, when you look at 3, 6, 9 months, when they start showing their actual earnings, that would matter. And so I think it's becoming a little more healthier than last year, I would say, in terms of valuations. We were sitting, if you remember, we were talking late last year, and even during our investor day, early February, that we are towards the higher end of the valuations, a little more bloated than what we were a year or two ago. And I think those are getting better and better every day because earnings were great. This whole quarter earnings were like way higher than expectation, and many stocks have corrected. So that's a positive for the market. So I'll stop here for a few questions. I think I did not discuss anything like Bitcoin and stuff because it's pretty much static. So one quick comment there would be that nothing new to add. I think we are just in a consolidation phase. The good news is similar to tech, it has kind of bottomed out there. And when I say bottomed out, I mean it's not dropping anymore, and the pressure seems to have released. We did discuss in our WhatsApp channel the whole Jane Street discussion, so I won't repeat that. we have been talking through that what can mostly those are speculations, by the way. That is not fact based. That is based on certain analysts coming and saying that how they have been manipulating the market and so on. But I would let those speculations just play out themselves. But overall, a lot of positive signs all across, I would say, at a macro level, other than, of course, the uncertainties. So just a final comment would be that we do have uncertainties on the geopolitics side. We do have some uncertainty around tariffs because of this Supreme Court order, because now we don't know if Trump, just to level set again those tariff levels which were negotiated, he might just find some new laws which can again go into the court, because it's becoming more of a now a legal battle on every front. In addition, already people are talking about putting some lawsuits for asking for refund and so on. So it's going to get muddier and muddier in terms of how the industry see it. So that, I don't think it's a big impact as we have been discussing. Like tariff were never a big negative other than the sentiment. But the uncertainty always creates a little bit of a pessimism in the market, and when you don't know something, some of those sectors which are directly impacted will act like there will be a risk of sentiment there. So that we have to watch out for. All right, so you can unmute yourself or you can put a question in the chat if you have any. But I think there's nothing else to add from my side in terms of where what we are seeing. Um, I would say just remember one thing, that we are, as we said, the whole NVIDIA example, the speculatory layer being so big, do not try to make sense of these big moves as fundamental problems, whether it is because of the software panic or as we are seeing the AI panic around the software stocks. I think there's a lot of merit to what you know about the industry, what you, if you are analyzing certain stocks, if you are aware of certain, if you have strong belief, you need to just make sure that you have a plan for long term in investing in stocks. That's how I would like to position it. All right. So if I'll just give it a minute or two, so feel free to ask any questions. Okay. Nothing at all. All right, guys. So I think then we can wrap up early. So this great having all of you. As I said, we will be posting some of these summary of the week. Maybe I can play that once again. Let's see if this time works. So people who joined late, we are just trying to prepare this in terms of means team is putting together some of these data for our internal consumption and also for posting on socials. All right. So thank you for joining, and let's talk next week again. Thanks, everyone. Have a great weekend. Bye bye.